Most likely, guys, the previous case showed you that sometimes to come up with a net profit can be quite tricky, especially in real-world situations. Last year, one good man stepped into a business as a chief executive officer. He put a lot of efforts on it. At the end of the year, getting his financial result, he deducted all company's expenses from sales. He was really glad when he got a net profit this way. But the company owners had a different opinion about his result. They pointed out that the company increased his debts as well, and they don't have free cash to pay down. So all his net profit was just written on paper, and they finally failed to agree. Before you enter a project, you should be ready to prove its financial result to anyone, including yourself. Remember, guys, net profit it's not earned while it's not confirmed. I'm not gonna give you the right answer for the John case right now. I'm going to give you something much more valuable, the quick and reliable grasp of financial statements. When you get it, you can hack this case like a peanuts. How about to learn an effective way to easily find right financial results for any tricky situations? Let's go! What would be the very first step to take responsibility for financial result? First of all, you should fix your starting checkpoint. That means to assess the company's financial position, its net worth. If you manage to agree on your starting point, you will manage to get your financial position in the future. Then you can always fix your progress. Otherwise, if you don't fix your starting point, you will not prove anything in the future. All the previous losses may be fixed right on you. To establish your starting point, you need to prepare a managerial balance sheet or financial position statement. The managerial balance sheet is a very special financial report. It's like a snapshot of what you actually possess and manage. While other statements focus on the results over a period of time, the balance sheet measures a company's financial position at the particular regular dates. We summarize what we have on a date, that's assets, and then deduct what we own, that's liabilities. The remaining amount is the owner's net worth. The net worth is often called as equity or owner's capital. A balance sheet is often called as statement on financial position. Imagine, guys, we each chipped in some money. Let's say we had $100,000 as a starting capital. You appointed a manager. Take me for example. You entrusted to me always net worth, and I worked so hard for 6 months in a row, and all this time you saw no dividends. So what would be your very first question at the end? Of course, where is your money and what is your net worth now? Let's say that the capital is 150,000 now. We see that it increased by 50k. The question now is where this money came from, especially if there is no owner's cash in, no cash out over this period. Guys, how would you explain this increase of capital? What was that? I wonder if it's net profits, right? This is exactly the financial result of business activities, and that brings us to the net profit definition from the owner's point of view. Net profit is the company's net worth increase as a result of its business activities other than owner's investments. Wait a moment, don't we normally calculate the net profit in another way? Usually we get a net profit as difference between revenues and expenses, right? Sure, you're right, that's a common way of doing that. But this way, managers often make mistakes. And also, they might manipulate the net profits unfortunately. You know, cooking the books. And that is exactly why owners must have a reliable tool to check the management financial result. Have a look at the profit control equation. To check your net profit, you need to get the net worth at the end, less the net worth at the beginning. That will give you the net worth change. In case the company's owners made some extra investments in the capital, you should subtract it from profit. But if they took something out, you should add it back to profit again. Competent owners always make sure of their profit this way. Net profit calculated this way should be exactly equal to the net profit you see in a company's income statement. Okay, maybe roughly equal, with a little room of error. If you check your financial position on a regular basis, this approach gives you a nice opportunity. You see not only the amount of your net profit, you see exactly what assets you got or lose if it's net loss. The next model, we're gonna break down the management balance sheet template in the most popular and convenient form.